So Rob's mentioned, and you've mentioned a few ideas about how folks can structure things, how they can save a bit of money. What are some of the fundamentals that you help folks look at when they on board with your service?
Okay, so one of the things that Rob mentioned is he said that we set up an LLP for them. So if you think, say I've got a limited company, and let's say my company makes a profit of £1 million, then the company's paid 25% corporation tax on my company, leaves me £750,000, and I want to take the money out, so I'm going to pay dividend tax at 39.35%. So that means that I've paid corporation tax plus dividend tax, and that's got a cumulative rate of about 53%. However, if, in the example Rob gave, limited liability partnership, you only pay income tax. So income tax is a maximum of 45%. So you're not straddled with two lots of taxes. In that case, it's income tax. And the thing what Rob alluded to is with their cars in a limited company are subject to a P11D benefit in kind and Class 1A national insurance. And we saw a client and their P11D benefit in kind for their cars was nearly £1 million a year. And we set up an LLP. An LLP has no benefits in kind because you're not an employee, you're a member, you're a limited liability partnership member. So a lot of it is that you've got to think about the structure that you use for your business. And a lot of people say, well, I've had this company or since I started the business, so it must be fine. I'm not saying it's not fine, but there may be a better way. And the question is, if you don't sort of like look at it, you won't know what the better ways are.
Do you find when you have those conversations, particularly people that have been trading for a long time, they're equally joyful, but also they burst into tears? Like, oh my God, I should have done this 10 years ago.
Yeah. I mean, a lot, but that's the way it goes. I think it's Donald Rumsfeld said there's the known knowns and the unknown knowns, and it's the unknown knowns that come and bite you. Yeah. And the point is, you people here are educating yourself because you've got different speakers, and hopefully some of this will ring true, and you think, oh well, perhaps I should have a conversation with someone because perhaps I do need to change my structure. Or so with some clients, we're suggesting a limited company and an LLP, and what we're doing is having the best of both.
Yeah, because you mentioned that up until 10.2 million, you need an audit. So Rob mentioned a detail yesterday. I don't know if anyone can remember it. Yeah. What was that?
I think he splits two companies. There are two companies.
Exactly. Yeah, exactly. Yeah. So that's why he's got 2 under 10. Yeah. Okay. So anything else apart from the LLP that folks can do to?
Why is not everyone just doing LLP and put the cars in? I don't know how.
That's what everyone asks. Actually, that's the first question everyone says, isn't it?
So the LLP, I don't know how. I've never set one up, so I don't know what the.
Why haven't you set one up? No, why?
Because it was the unknown.
So we suggested this to a guy, and he said, that's funny because I read about that and I spoke to my accountant and they didn't know what an LLP was.
Exactly.
And a lot of it is that they didn't know how to deal with it. Yeah. But for the sake of argument, an LLP is a limited liability partnership. Yeah. So a limited company, you both have you limit your liability. So you do need 2 people. But it doesn't have to be a business partner. You might say, well, I'm just on my own. Well, the other partner could be your mum, dad, brother, sister, whatever, but you need 2 people. You still have the same protection. You've just got to make sure that it's suitable for you. In some instances, say I've got a client that makes a profit of £5 million and it's just sort of 2 people in it. If the profits are all £5 million, then if you have an LLP, you're going to be taxed at 45% on £5 million. But you say, well, I don't need £5 million to live on. So I'll have a limited company with the profits I don't need to live on, and that's going to pay a maximum tax of 25% corporation tax. And the LLP is the bit I do need to live on. And because of that, so say that's £500,000, well, the maximum rate of tax in that is 45%. Whereas if you were taking it out from your company, you're paying the 25% plus the dividend tax of 39.35%. And that's how you get the 53%. So what you need to do is make sure you structure it properly. And it's the structuring that makes all the difference to this.
I've had many consultations with entrepreneurs, business owners of various, levels, and each time Rob mentions it, they quiz their accountant, over a weekend, and then they come and say to me, by the way, my accountant told me that that LLP thing, you can't do that. I've not had one person who's had an accountant that has agreed with it, by the way. So, you want to be talking to the right person, right?
Yeah, so a lot of it, the people come to us, they're accountants, like A, they don't understand it, B, it's too difficult, and C, it's a bit more, it's beyond their sort of, their ken.
Yeah, and most of them just don't want to put the extra effort in, So that was definitely my experience.
But with the cars and assets, you can make, so basically if a limited company owns an asset, and you use that asset, whatever the asset is, then you have a benefit in kind on the use of that asset, being a company van, a car, a flat, whatever. So if you think, say I've got an employee and he's on 100 grand on PAYE, I could say, you're not getting a salary, I'll give you a company flat, I'll give you a company car, I'll give you healthcare, and I'll pay for all the running costs of the flat. Well, that isn't subject to PAYE, so it's a P11D benefit in kind. So HMRC said, well, you would have paid him 100 grand, and you've done that, and let's say you paid some into his pension. How am I going to tax that? Well, that's where the P11D comes in, because it's a taxable benefit. And then it's subject to Class 1A national insurance as well. So that's sort of the way you do it. It's just a case of make sure it's all declared properly. But you can avoid benefits in kind if you have an LLP, because you aren't an employee of a limited company with an LLP. But you still have the protection of the limited liability for the business you do.
And so can people have as many cars as they want, or how does that work?
Well, the way it normally works is HMRC say you can only sort of drive one car at a time. But a limited liability, you can have other members. So you can have your partner, your wife could be on there, and husband or wife could be on there, and they could do services for the business, so they could justify having a car.
So you need a husband and a wife?
Well, it could be anyone. I mean,
I'm joking.
But the thing about it is that HMRC can't say your car should be a Ford Fiesta and you want a nice Audi.
Yeah. How did you know that? Okay.